There's only four. There's only. Well, I look like I'm a karate chop the camera, man. There's a. Bro, oh my. There's only 4 things you need to know in order to become successful in trading Forex. Now, there's a lot of other stuff you can build on from there, but in the beginning, you just need 4 simple things to become a profitable trader. And in this video, I'm gonna show you what those 4 things are right after this intro. Let's get it.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid. Oh yeah, trading get paid.
These are the 4 things that you're gonna need if you plan on being successful, profitable, and starting your journey toward becoming a professional trader. So let's take a look at what those 4 things are right here on the charts. Let's go. Number 1, we're gonna need to have an understanding of price action and market structure. So when we look at price action and market structure, what we have to understand is that price action is simply that. It's just the action of price. It's price moving up and price moving down, price moving up, price moving down. So as you see price move, that is price action. That happens as candlesticks. So each candlestick has a body and wicks, which we'll talk about in a few minutes. But when we see these candlesticks going down, that's called bearish. When you see them going up, that's called bullish. And so we need to be able to distinguish what is what. We need to know the difference between an uptrend, a downtrend, a sideways move, which are a range. We need to be able to understand what we're looking at on the chart. So when you see this moving down, you should know that this is a downtrend. This is price dropping in this particular market. When you look here, you see prices going up, so you know price is rising in a particular market. Like you see here, a nice uptrend, so you see prices going up. So you need to be able to distinguish the difference between an uptrend, a downtrend, or a sideways market like this. All right. The next thing is you need to understand where consolidations and where structures happen. So you see that price pushes down and it's all bearish moves. It's all downtrend right here. But then when you get here, it kind of moves sideways until you get another push down. Well, those things happen all the time in the market. So when you look at the market, you're going to see that happen all the time. Big move, then a kind of a sideways move, or what we call retracements. Then you see another big push, and then it happens again. And this continues. This happens all the time in the market. Downtrend, a little hesitation, or a range. We call it a base. And then another push down, another one, push down, another one, push up, right? You see that happen over and over and over again in the market. So you need to be able to identify those, because what that does is it gives you entry points. You don't want to get in the market when the market is already moving again, like it's already moving in a direction. You want to wait for another time where price shows you that a consolidation or a structure area is over. We do this by understanding support and resistance. So support and resistance is where you have the market comes here and it tests. So let's just put a line right there. You see that the market came here, and then before it broke through again, we kind of had price stopped a little bit, and it came before it kind of hesitated, found support, and then it finally broke through. Well, notice that when it came back up to that area here, it stopped at that same level again before pushing down, because what over here was support is resistance over here. What you're going to find in the market is that these areas that are support and resistance are going to be key all the way through the market. Those areas really never die. So when you look here, you look at that zone and you look all the way across and look at how many times, look, and just look at the dates here. So from here, that's July 19th. From here, right, this is July 26th. So we're talking about, this is a whole week of the market. And so it went all the way down here, but when it came back up to that same area, you saw that rejection again, and you saw that the market start to react the same way in that area again. Why? Because when you find those support and resistance areas, they're key areas where banks do business. And so if you can identify those areas, these become areas where we want to start looking for optimal trades. We want to look for areas like this so that we can trade away from these areas and not into this area. Why would I want to take a trade into this area when I know that the market is likely going to slow down when it gets there? I'd rather trade when it breaks through that area so that I can ride that momentum down. Same thing here. I don't want to trade into the area because then you're looking at this. I'd rather trade out of the area, okay? And so the same thing happens down at the bottom. You see, you have this area down here where it's the same thing. You have a nice area of support and it comes back, and you see how price reacts in that area over and over again. So when you can identify these key areas in the market, that is very, very important if you're going to become a strong and profitable trader. You have to be able to identify market structure, okay? Price action and market structure. The next thing you have to understand, number 2, is the wicks are not to be dismissed. Wicks are important. So when you look at these wicks, you'll look here and you'll see that you see big bodies and tiny little wicks. Big body, tiny little wick. Then you start to see a big wick. But look what happens when you get here. You start to see these wicks, and now look, now you have little bodies and bigger wicks. Little bodies and bigger wicks. When you start to see that, that's telling you that the market is slowing down. Then once you see that again, now you push through with a big body, and look what happens. Now the wick is on the top side instead of on the bottom side. Now that you see a wick on the top side, what is that telling you? It's telling you that the market tried to go up back into this area, but it got pushed back out. So if you look at that real clearly, let me open that up for you so you can see it a little bit better. Okay, when you look at that, you see here that the price broke through and closed out of our zone. Then it tried to push back in, you see that wick, and it closed out, so it was rejected. That right there tells you everything you need to know. That tells you that that retest is over and price is about to drop. The bears are in control. So look what happens next. Boom, price drops really nicely. So this would have been a beautiful area to take a trade. You could have taken a really nice trade right here and had your stop loss and your take profit, and look how beautiful that trade would have been, right? Understanding where wicks happen is very, very important. Let me come back to the main screen. Let's come back a little bit. And so when you look here, like for example, when it comes down, look at all of a sudden you start to see these wicks at the bottom. All of these black, gold, it doesn't matter. All these wicks are at the bottom. That's telling you that this move is over. It's telling you that price is trying to push down, but every time it does, it gets pushed back up. What that tells you is now that the uptrend or the buyers are taking over control. So when you see these wicks all gathering at the bottom, that's telling you price is about to reverse. So if you're in a sell, you need to close that sell and maybe start looking for buy opportunities, okay? But there's ways we can talk about that too. But these wicks tell a story. When you start to see wicks bunching up together just like this, that tells you that your move is getting ready to be over. You better get out of that trade as quick as possible, okay? Now, you come back up here, you get another wick bunching up at the top, and then it pushes back out, okay? So these wicks, again, are very, very important. Price pushes up, we get a structure, a high, a low, a lower high, a lower low, a lower high. We're testing that same area, and look what happens. We get a big, nice wick. This is called a pin bar, and we get a beautiful trade to the downside. Really nice setup right there, simply by understanding that wicks are important. You see the wicks down here, price pushes up. You see that over here. Now this is a little bit different because news happened right here, and that's another video for another time. But I want to just make sure you understand that wicks are important because they show momentum. When you start to see wicks going against you, what that's telling you is that price is losing strength in the direction you're in, and it's about to reverse. The strength of the market is about to reverse, and you need to change directions. Number 3 is you need to understand entry candles. You can't enter on just any candle. You can't just because something's yellow doesn't mean sell, or just because something is moving down doesn't mean sell. You want to know what are the right candles to make your entry on. When do I want to buy? When do I want to sell? So let's take a look at that real quick. Let's come back to this one as a good example. Like I told you a few minutes ago, you had your structure, and now you see that you're coming to an end of an end of a move, and now you see price is trying to push up, but it doesn't, and it gets rejected down. This candle is called a pin bar. Okay, we call it a pin bar. That is one of the greatest, if not the best, entry candle in all of Forex. When you see a pin bar, what it's saying is price tried to move, it tried to push up, and the momentum from this move here was not enough, and it got pushed back down. And so when you see that, that's telling you momentum is now going the other way. So you see that pin bar, that is your entry candle. Anytime you see a pin bar like that, that's a great time to enter the market. In fact, you can watch my video above, and I'll show you how to use pin bars effectively. So the pin bar is one of the best candles to enter on. Another candle is when you see an engulfing candle. Engulfing candles are very, very powerful candles in the market. So let's take a look at what that looks like. So you have prices moving down, and you see here that price is ending, it's in there, and then you see a big engulfing candle push out. What is an engulfing candle? It is when you have one candle that is bigger than the previous move that happened in the opposite direction. So you see this opposite direction right here, there's 4 candles, and then you see this candle here is bigger than all 4 of them. All right, so that tells you that the buyers just came in and took over the momentum of the market, and now they are in control. So if you enter the market there, here's what happens. You come up, you get a little bit of drawdown, but you get a really nice trade here, and boom, that's a great opportunity for a buy. Okay, let's look at another opportunity. You come here, you got all of this movement down, you got this movement up, and then you get this big candle here. That shows you that it's time for seller momentum. We looked and we saw that rejection candle here. That is a great opportunity to enter after that big volume candle, and here's another opportunity for a sell. So when you start to see these big candles, what we like to call them volume candles, it means that they're not looking at these little tiny candles in here. We're looking for big movement candles that are going to give us real momentum in the market. So my 3 favorite candles to enter on are 1, pin bars, 2, engulfing, and 3, close above, close below candles. You can see my video above, and I describe all 3 of those and explain to you how to use them. The 4th and last thing that you need to know is timing. You can't just enter the market at any old time of the day. Now you can, but it's not the best idea. What you really want to do is you want to find when does your pair move. So we're looking at GBP USD, so British pound US dollar. Here's a little pro tip here. This little indicator is called sessions. If you just go up here to the top and you type in sessions, just like that, here it is. You just come and you grab that right there, okay? Here, and what happens is when you put it on the chart, it's gonna make these big colors. Now, I have it already set, and you can see my settings because I'm not really interested in Asia. I'm only really interested in the London and the US session. So what happens is it's showing you the different trading sessions that you're a part of. So let's get rid of Asia because we really don't want to trade in the Asian session. But we do like London and we do like the US session. So when you look here on the chart, this yellow is London, this pink is US, and this peach looking color in the middle is when both the London and the US session are open together. Now I want you to look. Notice here how during London, look at the size of the candles out here for Asia, and look at the size of the candles here during London. Look at them during the crossover session. Look at it during, it starts to get smaller again as the US closes. And then we get back into Asia, and look, no volume in the market. We start to get big, and then boom, London opens. Big moves, crossover, big moves, and then we start to die out again. Here we are in Asia. It's dead. London, boom, big moves. Real nice, clear moves. Then we get in here. Asia, okay, it had a nice move because it came off of a zone, but that's it, one move. Then we get back into London, boom, nice move, all the way up. Once you get into Asia, it kind of dies again. London, big candles. What am I showing you? I'm showing you that if you see a trade that's happening, or what looks like a setup that is happening, but it's happening at a time of day where Asia is open, why would we want to take that trade when we know that there's really no volume in the market? Why would I want to trade during this when I can wait and trade during this? Okay? Why would I want to trade during this when I can wait and look right as soon as London opens, we get that nice pin bar and we can trade like that? That is better. Find out what session works best for you. That's very important. Can you trade the London session? That's where the most volume is. Can you trade the US session? That's where the second most volume is. Can you trade the morning crossover when London and US are both open? That's a great time to trade. I want you to find out where you can trade and what's best for you, where you can get real volume and not, be playing around with moves that are just going back and forth. You want to have definitive volume going in your direction. Okay? So the timing and the time of day that you're trading matters. So the 4 things that you need to know market structure. You need to understand that wicks are very important and the momentum of the market is very important. You need to know, number 3, you need to know your entry candles. You need to have good entry candles. And number 4, you need to know what is the best time of day to trade for you. If you can understand those things, what you can do is just simply find an entry candle at the right time of day and then trade it from one zone to the next zone. Because now you understand where those zones are, because you understand market structure. You understand that there's volume in the market. You understand the right entry candle, and you understand that entry candle is happening at the right time of day. And when you can put all of that together, you're gonna find really solid trades that every beginner can take and become profitable. All right, guys, so there you have it. I hope this brought you a lot of value. This is the 4 things that you need to become a profitable and successful trader in the beginning. Now, like I said, there is so much more that we can do to build upon these 4 things. There's strategies, there's market geometry, there's so much that we can learn in advanced and intermediate and advanced trading that's going to take you even further and faster, and there's so much that we can do with that. But these are the 4 things that you need if you want to start out strong and make profits and become successful in the beginnings of your journey. Okay, so make sure you hit that subscribe button if this brought you value. And guys, I want to just invite you, if you want to fast track your success and you want to take your trading to the next level, I got you. Come to Trade and Get Paid. Go and to tradinggetpaid.com, become a student, and just look in the comments and see what the students are already saying. We got people going full time, people that are quitting their jobs because they're doing Forex full time. They're taking my trades, my courses, my videos, the community. They're doing everything I'm telling them to do, and now they are successful and you can too. Go to tradinggetpaid.com, become a student today, and let's take your trading to the next level. If this video was good and you got a lot out of it, I want you to watch this video too that's coming up on your screen, because this is a good beginner strategy that's going to take you all the way from the 4 basics into a beginner's strategy that will set you up for good success to start out your Forex journey. I'll see you in the next video.